Hello, everyone. Welcome to the June 2025 DNA webinar. If you're tuning in monthly, you've been through the range of topics with us this year. Today's discussion is how to build campaigns investors trust. People don't believe what they see online. The more social proof, the more third-party validation, the more you can prove that you are going to hit your goals. You are going to grow the valuation of the organization between this round and the next, between this round and a liquidity event. Going to talk about different digital strategies, tactics that we see performing on many of the top Regulation A plus, many of the top Regulation CF, Regulation D campaigns that are live in the market today, earlier this year, last year. Going to rifle off a list of 8-figure campaigns that we've been a part of this year. 7-figure CFs that have hit the full 5 million. Going to get into that naming convention further. So if you're listening to this and wondering, what is he talking about? It's a lot of acronyms. Going to break it all down. But essentially how to raise millions of dollars. Joined here by Khalil Doheny, Nikki Chung, Khalil on the content side, Nikki on the advertising side, driving traffic from investors with advertising and retargeting, continue to engage them, building funnels with content. It's typically 7 touch points or more before an investor converts. You want to be intentional about what they see. You want to show momentum, traction. Khalil is going to be getting into the details of that and showing how we get more investors from the traffic that Nikki's driving. It's going to be a balanced conversation. You want to have your notebooks ready. There's going to be a lot of information thrown at you, again, from the top issuers in the space and the campaigns that have produced the capital around them. So I kind of skipped over Khalil and Nikki. Gonna let Nikki, Khalil give you a bit about their background, let you understand who you're talking to and the volume of campaigns, the amount of funds raised that they've been a part of. Khalil, you want to get us started, familiarize the audience a bit with who you are?
Yeah. When you said June, I had to take a double take. I can't believe it's already 6 months into the year. We've done, 6 of these already this year. Time, flies when you're having fun.
It's happening.
Yeah. But yeah, hey everyone, I'm Khalil. I am head of content here at DNA. Been with DNA since 2020, worked on a high volume of these accounts from the content perspective. And you'd be very surprised with how surprising content really plays a huge impact in your campaign. A lot of times, clients want to just drive traffic to their campaigns. Definitely, we can definitely do that. But what happens when you get to your campaign? Are they seeing those portal updates? Are they seeing you connecting with your audience, throwing content? Are you showing the progress? A lot of times that is the missing mark, and really hope the plan after this webinar is you guys have a better idea of how to implement those specific tactics to showcase that momentum and what is moving the needle to get you from wherever you want to go. And Nikki.
Cool. Hey guys, I'm Nikki, media buyer here at DNA. Been with DNA since 2022, so I've really it's been 3 years, but I've definitely worked on a high volume of campaigns, on advertising campaigns as well, across different platforms, and have seen some good successes with quite a few campaigns, and just want to share that with you guys and share some of that expertise to help you get you on the path to success. But one thing that Khalil mentioned that I see a lot of issuers miss on is that they don't do the content marketing. They only want to do ads. And I've seen time and time again that the issuers who run content marketing and ads do a much better job than those who are just relying on ads for traffic. So yeah, with that being said, I'll pass it back to Jason.
Excellent. And if this is the first time tuning in, just a brief overview on DNA while I'm loading the deck up to the screen here. We've worked on over 500 capital raises that have collectively produced 9 figures of capital using content marketing, advertising, and outreach. That's what's behind a lot of these findings. We don't do this to promote. We do this to be educational. Brendan, our creative director, works with the team to put together this deck every month. So how to build campaigns investors trust from first click to final commitment. I'm going to talk about the funnel and how many people fall off along the way. So I'm Jason Fishman, been doing this since 2015 with Reg D accredited investor campaigns. My background's in ad tech, worked with a lot of Fortune 500s. That's how I was able to first reach high net worth, high household income audiences, using various data sets, targeting investors with various, behaviors and interests, filtered down beyond net worth and household income. I could tell you that most campaigns don't fail because of bad products, investment opportunity around those products. They fail because investors don't trust what they see. Hey, investors don't trust life insurance policies. They don't trust the the standard funds and different opportunities that their commercial bank, credit union makes available to them. These are high risk, high return investments to begin with. That's the section of the portfolio they belong in. 10% of an investor's total portfolio, maybe 20% if they're on the aggressive side. So by nature, they're not going to trust it. Then, looking at an offering page, you're going to be able to poke holes. Why does this industry matter now? Why does this product matter? Why is the team going to be the ones to do it? Why are they focusing on this? Why haven't they done bigger things? The list goes on and on and on and on and on and on. I could pick any deal apart, especially with the marketing lens. We look at all the top deals every Monday morning. I do a report on all of the Reg CF campaigns, Regulation A plus campaigns in the market, specifically the top 10, the top 10%, top 20%, top 50%, all the campaigns that have raised zero. We do a marketing audit of one of the groups in the top 10 every week. So we cycle through them all. I want to know everything that they're doing to obtain success. And we're typically picking things apart and looking at how they could do better. So even the top issuers are in that category. You need to be able to show them why they should trust you, why, that should be earned, why there's different results. By the end of this session, actually, Khalil, you want to tell them? You want to tell listeners, viewers, by the end of the session, what they're going to know?
Yeah. So you're going to learn how to create content that builds investors' confidence before the first dollar is even raised, why most paid media campaigns fail and how to structure them, the full funnel, so from top to bottom, and what today's investors expect to see before they commit, and lastly, how to avoid costly mistakes that kill momentum. Overall, as Jason was talking about in the previous slide, investors don't trust what they see. So everything is about storytelling. You can sell anything as long as the story is creditable. You want to show that traction, that third party validation. Who is talking about your campaign, about your brand, whatever it is? You need to show that there is momentum and why someone should be interested in your campaign. And hopefully, after this webinar, you'll understand why content plays such a huge role into it.
Nikki, you want to take it from here?
Yeah, sure. So the challenge with crowdfunding, it's really a lot of people don't understand how it works on the marketing end. Most people, when it comes to marketing, are more knowledgeable on how e-commerce works, right? So the big difference between crowdfunding and e-commerce is that there is a lot more touch points needed and a lot more trust building needed in order to get the sale. In our case, for crowdfunding, it's the investor. So traditional e-commerce, most products are 50, $100, pretty low commitment. Crowdfunding, there are higher minimums. We're looking at 250, maybe 500 plus, 1,000 plus. There are campaigns that go even higher. So we're gonna have to do more trust building, more social proof, and to really push that trust in order to get someone to commit money to something they're not going to see immediate, you know, results from. Right? E-commerce, you buy a product next week, it comes, you're happy. Crowdfunding, it's years down the line of commitment. So it's not only the money that they're putting in, it's their time and commitment. So going back to the original point, We need to build that trust. How do we build that trust?
Good way to break it down there, Nikki. I've heard investors say 7 years, 10 years. They're expecting the company to exit, maybe to go public. 3 years, 5 years, that's very fast. 5 to 7, good goal to go for. And remember, most companies never make it to those stages. So that's if it's successful. Now, when we're looking at the funnel, I talked about the trust first funnel. Your funnel builds momentum. So you can see to the side here uh, where traffic's going to filter through. And the top of that funnel is the awareness stage. Advertisements, maybe an article, people are seeing you for the first time. They're now aware of your company, the investment opportunity, the fact that you're raising. Maybe they read in further. Maybe they find their way to additional mindsets, additional stages of their process. But ultimately, whether that happens during that first visit or later visits, statistically, it's going to be later visits. It's going to be 7 touch points more, as Khalil was saying. They get into the consideration stage. They're considering investing. This looks good. Sounds like there's a nice opportunity. The numbers are strong. Take a look at the valuation, the share price, the team, the partners, perhaps their sales, audience growth. Maybe I'll invest in this. But then they move on. They move on to other investment opportunities. Maybe they move on to other websites, other apps, because remember, they're logged in through a mobile device, probably. Uh, maybe a desktop or a laptop. We're often multitasking when we're on these devices. News headline comes out, they're watching the 11 o'clock news, whatever it may be. They get distracted. They get called down for dinner or have to head out to work or to another commitment. We get pulled in different directions. We tell ourselves we're going to come back, and most of the time we don't. So many people do not make it out of that consideration stage. It's important to have different types of marketing to pull them back in. The follow up, right? I talk about sales and marketing as a sales on a mass level. Most sales occur between touch point 5 and touch point 12. Follow up 5, follow up 12. Meanwhile, most salespeople never follow up more than once. Like 10% of salespeople who follow up more than 5 times. That's when it's all taking place. And we could go through the psychology, we could go through my interpretation of what the mental process is going through that. But what I want to focus on is what type of marketing can you do to stimulate a higher conversion rate from one stage of this funnel to the next? How do you get people to consider the deal? How do you get those that are considering to actually invest? And remember, intent is what we have listed in there. It's the next stage of the funnel. They intend to invest. They say, I'm going to invest, and only a small percentage of them actually will. I talk to founders every day who say, oh, yeah, this guy's coming in for 100K. My friend's coming in for 50K. And at times, a month later, 2 months later, yeah, I'm still following up on that money. That's the standard way of things. It is a numbers game. You need enough people at the intent stage to even think you're going to get enough investments. And then after you actually see them conversion, there's another stage of repeat conversion. You want to play for multiple investments. We'll see 10 to 30% of investors on a Reg CF participate multiple times, especially during the closing. There's a fear of missing out that occurs if you don't have enough people in that funnel, if they're dropping off, if you're not keeping them warmed up with good, engaging content that's stimulating social sharing, it's stimulating high authority links. You're losing opportunities here. So repeat conversion, and then ultimately that bottom stage of the funnel, advocacy. Peer-to-peer marketing is the ultimate marketing. You want people marketing to people they know about you. You want friends telling their friends, coworkers telling no coworkers, family members telling their family members, you need to invest in this company. So each stage needs to be tailored content that nudges people forward. You need to have an understanding of where they're at in their journey, their consideration process. That way you can be very, very personal. You could be very custom in how you're following up with each audience, and digital allows for that. Khalil, what are some of the common fails that you see around the funnel, around content production, and understanding where in the buying cycle any of these investors are around the shares?
Yeah, after all of that, I thought the webinar was over. And Jason, you were just, just spitting fire. But in all seriousness,
Passionate topic, but we have a lot more details to get into here.
yeah, so where team fails, content team, there's a disconnect between the investment and their brand. Of course, we want to talk about the brand. We need to talk about the brand because you need to know what you're investing in. But you also need to talk about why invest into this company. You want to talk about the investment opportunity, the market size. You're not investing into the product, you're investing into the company, into the team, into the people that's behind the hydro flask. You want to invest, you want to create content that is going to showcase all of that. And in today's day and age where there's content coming from every single side of the universe, you need to stand out and create content that has not been seen before, and put yourself out there. Create content every single day. This webinar right here is content. Everything that you do, from picking up your phone, taking a selfie, taking a picture with your team, with the factory behind you, whatever it is, you want to showcase that there is momentum in your campaign.
Number 2, media team. Nikki, what does this mean?
Media team optimizes for clicks. We are optimizing for clicks. I think earlier on the campaign, people think that we are optimizing for conversions. Where we are, there are some campaigns we see conversions early on, investors early on, which, it shouldn't be an expectation. So this kind of goes back into the funnel and really the whole trust building process. Early on in the campaign, we are really just looking for awareness to your brand. We're bringing new people to the campaign and starting to build a relationship there with that. So while the common disconnect here is the click part of the campaigns. While we are optimizing for clicks early on, later on, we want to be optimizing more for conversions. So there is a lot of people don't understand that, and they're saying, oh, like 2 weeks in, they're saying, oh, or like a week in, they're like, we don't have any investors, and they're like, why is this working? We want to quit. No, it can't be like that. The ads process is a marathon. It's not a sprint. So we got to take it one step at a time. Early on the campaign, clicks later on, we'll do more retargeting, and the conversions, the investors will come in naturally.
Can't just focus on the cost of capital. Can't just focus on the return on ad spend. It all starts with those clicks. If you're getting clicks at 40 cents, 50 cents, or if you're getting it at $3, let's go back to 30 cents. That's a tenth of the price. You're going to drive 10 times the amount of people into that funnel we were talking about. That's why it's so important to look at it from this big picture, from first click to final commitment. No shared strategy or KPIs is all too common. KPIs, key performance indicators. Again, we're going to get into these acronyms. We're not trying to throw a bunch of terminology out there, but it is easier to write KPIs than key performance indicators, which still may leave us with question marks. So key performance indicators. We have to know what we want to measure. It's not just about measuring how much capital is coming in. There are a list of different things you have to look at before. Otherwise, you're just going to write the whole thing off. If I want to get 6-pack abs, I can't just look every week and say, hey, do I have 6-pack abs now? There's a lot of different numbers I'm going to have to take into account around working out, diet, the types of exercises I'm doing, the types of movement that I'm having, and personal health goals. And maybe over the course of months and months and months and months and months, maybe some people are never even able to achieve it. You're able to get there. You can't just say, hey, did we raise the full 5 million yet. And when I say strategy, we have a great webinar. We have a series of great webinars on the 8-point plan. It's a system I've built. It's my interpretation, our approach to strategy. I do believe it's all encompassing. I've written about it in Forbes. I just led a in-person workshop in May around it. Have materials if you reach out to us, can send you a checklist. Actually creating a GPT around it, so hopefully able to provide a link around that soon too. But the idea is you want to build an algorithmic roadmap to your goals. You want to be able to say, hey, month one, we're going to be hitting 200K, and here's how we're doing it. And this is what we're going to do to ramp things up after a rolling close and a disbursement, in the following month. And we're going to be up to 500K at that point. And then the next month, 800K. And then the following month, 1.235. And this is what we're going to optimize if we're not hitting the performance goals. The 8-point plan is about looking at your industry, doing a thorough competitor marketing audit of groups competing for the same audience, investors, and being able to build the audiences, the channels, the creative that's going to go into those channels, strategic partners that can accelerate and reach, captive audiences that are already in effect, and the algorithm that you're looking to hit, impressions, clicks, conversions. Without that, you're kind of just shooting in the dark. Hey, I'm gonna go live, see what happens. It's the reason why 50% of issuers on a Reg CF campaign in 2024 didn't raise more than $60,000. It's the reason that only 7% of issuers on a Reg CF campaign only raise a million, are able to raise $1 million or more. I shouldn't say only, are able to raise $1 million or more. There were 5 campaigns of, I believe, 1,400, over 1,400, it was 1,434, but over 1,400 that hit the full 5 million last year. Happy to say we work with many of these groups, so that's where we get these formulas from. But it's the companies that are doing a strategy, a pre-launch campaign, building an audience, starting them in that funnel well before they go live. And there's compliant way to do it, of course. They're the ones that hit the best KPIs, the best goals. Without it, again, you're just looking to see what happens. Khalil, want to
Yeah.
fire to these?
Yeah. So messaging and consistency across channels. Again, you'd be surprised how common this is. You want to be consistent with your messaging all across. You can't say one thing in your LinkedIn and then say another on Instagram. You need to have cohesion all across because you don't want to confuse your investors. Someone could be hopping in from any angle. Someone can hit a ad on Meta, they go onto your Facebook page, and then they go onto LinkedIn and it's something else. So, keep your messaging consistent across all channels. So that way you're not risking confusing your potential investors. There could be someone who was very interested in investing, and then they clicked on that ad, and then they hopped in and did some due diligence, and then they were not sure what they were actually investing into. Yeah, and then successful collaboration. So you want to know what you are talking about or who you're talking to. Your first month should be based off, should be that testing phase. Even before you go live in the pre-launch campaign, that is your perfect opportunity to see what people actually want to hear from you, what they want to see, the type of content that you should be creating. And then from there, you're able to shape your campaign calendar into something that is going to be worthy for an investor. Like I said, consistent messaging is crucial. You want to have content that informs from all angles, not just one channel. And yeah, you want to continue to optimize. You can't just be doing the same thing over and over and over, expecting the same result. That is the definition of what is it? Going psycho, going crazy.
Insanity.
Yeah, insanity. There we go. And so always be optimizing. That is our slogan here: test, optimize, and scale. So yeah.
So, Nikki, what do we have going on this page and why does it matter?
Oh yeah, so awareness stage, that is where your ads shine. It's top of funnel. So the job of the ads is to get people's eyes on your company, on your brand, your campaign, whatever it is. The goal is to stop the scroll and build initial credibility, time frame. We want to be building an audience and building that retargeting audience for the first 2 to 4 weeks of campaign. So this also relies, it changes, varies based off your budget, but for the most part, most campaigns takes 2 to 4 weeks to really start building an audience, get a retargeting pool of people interested in investing into the campaign if they haven't already. Um, and really, the challenge of doing ads is cutting through crowded feeds to reach these cold audiences, right? You're bidding against thousands of advertisers who want that same audience you're bidding for, because it's, let's say one person, right? They could be interested in your campaign. They could also be interested in tons of other products as well. And those companies selling those products, or even your competitor industries or competitors in your industries doing equity crowdfunding campaigns, they're also advertising to your audience. So that's really the challenge of the awareness stage. So that's why I say it's hard to get an investment during the awareness stage because there's so much competition. But once you do more nurturing, you do more retargeting ads, and importantly as well as you do more content, right? There's email marketing. People, you can set up a team to reach out to these people through the phone, whatever it is, webinars, right? Once you have that down, things get a lot more smoother down the line. So the awareness stage is very important. You got to remember the first 2 to 4 weeks of the campaign, the ads job, and pretty much its only job is to really build awareness, start building a retargeting pool to then retarget later on.
Yeah, it's really a tag team effort. With that, whenever Nikki launches a lead ad, then we go into the our issuer's email platform and connect that lead ad. So the emails are going directly straight into that funnel, and now they're hit with an email drip campaign. They're getting that first email from you, and then a week later they're getting another. Now they're added to your weekly newsletter. You are messaging them about the investment opportunity. So you're growing your list from a little baby list all the way to this list of potential backers that want to hear from you, that want to learn more about your product, about your brand, about your campaign. And now you can take them through along the ride, even post campaign. You're bringing them along with you. If you launch another one, you now can reach out to this audience like, hey, you've invested in before. We are going live again, and this is why we are going live. And here, learn more, invest in us, and bring it to your community. And now you're building this network of just investors of investors.
Yeah, I also want to add on, like, I think emails are kind of underrated. People don't think it works, or, there are people who don't want to do it. But email marketing is really good because it's a very high quality touch point. Like the ads can only do so much, right? You're scrolling, you can easily scroll past it, you can easily press skip and it's gone, right? Emails, they get delivered directly in your inbox and it's gonna stay there until you delete it, right? And most people, like, if they have something they're interested, especially if they signed up through an ad, they submitted something, they're likely to open that email as well. So it's because they're interested in it, right? That's why they signed up in the first place. So email's a very high quality touch point. It's more personable. And I think it's better in trust building than, an ad can do.
Email is still a top form of digital communication. So if you're able to get an audience from an advertisement to submit their email address, you can then scale it up because advertising you could intentionally ramp up. Tougher to do with organic media or outreach. You could email a bunch of people cold, but if they're opted in, they're going to respond more. Uh, Clue's been incorporating a lot of SMS campaigns as well. So email is interesting because we have this spam filter. Things could get stuck in spam. The audience may never see it. It's only a percentage of the audience that'll occur, but that hasn't really hit text messages in the same fashion. You send a text message to someone, they're gonna see it. Whether they open it, whether they delete it right away, whether they report it as spam or something like that, which is, again, much different to do than over email. I've heard founders tell me once they're on a texting level with investors, they've got them. Their words, not mine. But there's something to it. And again, I don't want to say it's 100% open rate, but they're going to see it. They're going to determine whether they want to, look at it or not. It could be someone in their family trying to get hold of them. So use the traffic sources to get things going with the funnel. And the founder story formula, we're talking about channels, we're talking about some higher level stuff in general, but to really get granular, 3 components that humanize your brand, person, who you are, and why you care. Really open up. Allow them to feel like they know you. It's the case when we poll investors and ask why they invested was one of the top Regulation A plus campaigns. They're mentioning the founder by their first name. They are saying, let's say it's Boxable, hey, Galliano, Paolo, let's say it's Mode Mobile, Dan, Avidane, Graphene. Hey, Brad, I was watching him on the webinar. It's important. You're investing in them. People invest in people that are managing entities, but it's those individuals that are going to make or break the company. So video content, webinars like this, podcast appearances, speaking at conferences, repurposing the video clips from all of those, articles written firsthand, not just with AI, polished up with AI, sure, but write it from the heart. Really give your thoughts precision with how you're putting pen to paper, or I guess typing these days, but you get where I'm going with it. I'll hop on a call with a strategic partner, industry expert, someone from a different vertical who wants to get involved in this space, uh, prospective client, and they'll be referencing things from last month's webinar that I said. They'll be referencing, points from last week's podcast, and that's because I'm putting that out there, and I like it, and I pick up the conversation from there. We're able to get to a further place quicker, which you're able to do when you're speaking to investors. It does not have to be, hey, here's who I am, and this is what I've done, and here's exactly what's on the page, and I'm reading it word for word for you. If they already know all that, if they've already seen video that you're putting out on a weekly basis, the discussions look much different. You do not have to prove yourself as much. You can have a real discussion with them. And with these digital formats, you can make that discussion for a broad audience and available to thousands of people. When I think of Reg CF campaign, it's millions of people who are seeing this. If you have clips from your videos of you talking, potentially millions of people could feel like they know you. The problem, what frustrated you enough to start this? Really, get into the thought process, the weeds, the experiences. Back to the Future. I built the flux capacitor when I fell and hit my head. And, talk about the actual moment. Allow them to feel that. I could tell you about working with startups that failed. They were undercapitalized and they never made it to market. Amazing products that never saw the light of day. That's why I focus on these investment campaigns. That's why I'm on the front end of performance for marketing. That's why I'm bringing thousands of investors to the offering pages with advertising. It's not that I like giving Mark Zuckerberg money. It's that the performance that follows from the traffic. It's I don't want to say the most meaningful thing. That coupled with content and pushing the audience through is how it's done. This is the formula. But if I talk about that frustration, I'm able to relate to the audience a lot more. You want to be able to do that in your content. You want to be able to use it in short form in your advertisements. The purpose, your vision for change. Here's why we did it. Here's why we did it on a mass level. Here's where we're going from here compliantly. And an example, behind the scenes founder, videos consistently outperform product demos. And it's a selfie video. It's not $100,000 shoot here in Los Angeles. It's something that feels relatable, something that's showing up on people's mobile devices in between posts from their friends and family.
Yeah, the era of not having content is over. You know, we have content. It's all right here on the phone. All you have to do is pick it up and create it. Content back in the day was just stock images and lifestyle photos, but that has changed. The quality of the camera on your phone has changed drastically, and you can create something in seconds, and that couple seconds could potentially generate, dollars. So create content. I know it can be a little intimidating at first to pick up the phone and talk to it. It is something you need to get over, and just, that comes with practice. But that is the most personable type of content you can create, where you can just pick up the phone, look at it, and just tell your investors your story, why they should invest into your brand. And yeah, that also just comes with third-party validation. You want people to be talking about you, and you also want to showcase the momentum that is going on with the campaign. Awards. What award did you win? If you are a brewery, did you win #1 brewery in your state? What partnerships did you just create? Did you just sign a deal with a manufacturer plant that is going to get your product to where it needs to be? Who's talking about you? What customers are giving you testimonials? Do you have a product on Amazon? How is that testimonial, that customer review section? Take screenshots of that section, post them all across your social channels, as well as your investor testimonials. If you have an investor testimonial, say on Start Engine, you can screenshot that testimonial and upload it to your Instagram, your Facebook, or all your other channels to showcase that there are people talking about your campaign. And lastly, talk about yourself and your team. Why is this team great? Who on my team is going to be with us to take us to that next level? Where are what school did your team go to? What degree do they have? What was their experience in this field? You want to showcase who your team is. Anyone can talk about their team, but it's, you need to show the proof that this team is going to take the brand to where it needs to be.
You need to craft the narrative that they then repeat.
Nikki, talk about the platform strategy here.
Yeah, platform strategy. We use Meta because it can definitely get you a large reach. I know there's other strategies to get reach out there. There's organic, email marketing, etc. But Meta for us is the most reliable way to do it. Like organic, you can say I'll just go viral and you get a lot of people, but that's not a reliable strategy. Everyone wants to go viral, but not everybody can do it. So for Meta, it's pretty much guaranteed. You put in a budget, you're gonna reach people. More money you put in, the more people you reach, right? We can get pretty granular with our targeting as well and hit people who are investors. There are high income investors that we can target as well on Facebook. So there's a variety of things you can do. Facebook does love video. So, talking about things that we in the previous slide, there are different videos you can do. Pick up your phone, shoot yourself a video, talk about traction, customer testimonials, investor testimonials. Those are all great things to talk about for ads, especially when it comes to retargeting. Budget allocation, 40-50% of total campaign spend. Content focus, mobile first video content. So essentially, you want to focus on the videos that you're promoting, targeting. Start broad. We like to cast a wide net to see which pockets of our audiences are interested. And then later on, we identify maybe there's a specific region, specific state that performs much better. Maybe there's a specific age range that performs better for your campaign. There's also gender targeting. Maybe for most campaigns, men perform better for equity crowdfunding, but I've seen campaigns where women are the majority of the investors. So test, optimize, and then scale.
And Nikki, I see a question here. Why not LinkedIn? So many investors that I know don't participate on Facebook or Insta.
Yeah, so LinkedIn is, from what I've seen, we haven't seen too much success on LinkedIn, some varying degrees of success. But LinkedIn is also very expensive to do, and the audience I wouldn't say tracking, but the audience targeting isn't really that great when it comes to equity crowdfunding. Alongside that, you got to think on LinkedIn, most people are there just to like either make a post, they're looking for jobs, or they're looking to network. So they're most likely at the time not really looking to invest into something, unless maybe they're like angel investors or some high tier investors. But I think when it comes to LinkedIn versus Meta, Meta will get you a bigger audience, whereas LinkedIn is much more limited. And because Meta includes Facebook and Instagram, so you're going to get a wider audience, and Meta's data is better than LinkedIn's, I would say.
The data comparable in different ways. The metrics I think are a big standout. So when we're looking at metrics on Meta, CTR, click-through rate, we want 1 to 2% of the audience to click. Many campaigns, 3%, 5%, 7%. But if we're getting at least 1 to 2%, we're in a good place. The industry average is 0.5 to 1. Meta will say 1. So keep in mind, that's still 99, 98% of the audience not clicking through. Some will search on their own accord. They'll view the ad and take it from there. The CPC goal, that's contingent on your CPM, the cost per 1,000 impressions, the rate that you're buying the advertising at. If you're under $1 on a traffic campaign, ideally under 50 cents, that's great. All comes down to the quality, of course, though. These are mid-funnel metrics, getting people to those awareness consideration stages. So even upper funnel at that, the retargeting cost per click, you may pay more on the CPM. It's a bidding system. You may have to pay more to reach that same audience. You could be at a $2, $3 click, but average together, if you're at $1, maybe 2, you're hitting what I would call, using best practices, good performance on the mid funnel. Video views, 3-second, view rate above 70%, engagement rate of the ad, 2 to 5% on organic content. So look at your audience, see how many engagements you're getting, and if it's fitting into that percentage. We can talk about return on ad spend a bit later, but just looking at this consideration stage, move leads from curious to seriously considering the investment. Weeks, 3 to 8 weeks of the campaign. It could take a while. 7 touch points isn't going to happen overnight. You may see some quicker conversions right out of the gate and want to lean into that, of course, but keep in mind there's audiences that are going to take this window of time to perform unless you're selling out or your campaign's coming to a close. The challenge, building trust and answering investor questions throughout all of that.
Yeah, and this is really where a webinar will come into play. Invite your audience to a webinar, so they can learn more about about yourself, about the company, about your product, about your campaign, and show that personality. They're considering investing, make them invest with your personality. People invest in people, and this is a great opportunity to showcase that. And you don't want to go straight off the bat and sell people. You want to show them value and show them the real reason why you're launching a campaign to begin with. What is the reason behind it? Are you just here to take my money, or is this actually going to be something that is going to be meaningful? And this goes from even if you're going to be doing a campaign after your first campaign closes, you gotta keep that communication alive. You want to even have webinars, emails, social posts, portal updates, even post campaign. So that way, and we're going to talk a little bit more about that later in the webinar, but it's just very important to keep the momentum going and don't take your foot off the gas, especially during this aspect of the funnel. Yeah. And
So just firing through these next 5 points, and I'm going to hand it off to Nikki. But content types that build confidence, financial transparency, revenue growth, use of funds, numbers resonate with investors, competitive differentiation, what makes you unique, why should they invest into your horse in the race, why your company in the vertical industry, you want to highlight this as much as possible, really emphasize it. Team expertise, again, people invest in people, the founder and advisor backgrounds, not just, a copy paste, create it so that it's consistent with the channels that you're distributing on, but get them excited about who's involved. Make it seem like a done deal because these individuals are a part of the adventure. And investor testimonials, social proof from current backers, third-party validation, having an investor say why they participated, why they put funds in, whether it's listed on the page, whether it's showing up in an advertisement with permission, of course, whether you're quoting them in an article, co-authoring an article with them, have them sitting next to you on a webinar, maybe they're doing the Q&A with you, and then traction updates, partnerships, as Khalil was talking about, customers, milestones, demonstrate this is a moving ship. It's hitting its goals with or without you, Mr. or Mrs. Prospective Investor. Now's your opportunity to hop on the ship.
All right.
Nikki,
So shifting the conversation back to advertising, the retargeting strategy here. This assumes that you're about at least a month to a month half into your marketing campaign. So tier one, if you have the website pixel set up, of course you should. Website visitors, these are the people who've been to the site. Some of these people have started the investment process, but have not finished the investment process just yet. These are your website visitors, high intent. Tier two, video viewers. They saw your ad, they're engaged, but they haven't really gone to the website to consider looking at everything just yet. And two, three, they're email openers. These are warm leads that we can grab from the email marketing platform and target them, retarget them on ads. And so we want to be targeting all of these people as part of our retargeting strategy. These are all your warm audiences, and these are people who are likely to invest in the campaign within the next couple weeks or maybe further down the line, depending on where they are and the touch points that we talked about earlier, 7 to 17. That's the key goal when it comes to advertising. So it depends on where they're at, but essentially you want to be targeting all these audiences. And then going into a bit of creative refresh every 3 to 5 days to avoid fatigue. And now this also varies depending on budget. At least every week you should have at least 1 to 2 new ads out there for your audiences, especially if you're just starting on ads and you have smaller audience. These people are going to see ads like, I don't know, like 5 times a week. And you don't want them seeing the same exact ad like every single day. It gets pretty annoying. So you want to refresh these ads, make new content, make new ads, and put them out there every week or so at least. So when you're in the mid campaign and you do more retargeting, we like to bump up the retargeting budget as we are getting more people into the retargeting pool. Because remember, at the same time, your cold prospecting campaign is running at the same time as your retargeting campaign. So they work hand in hand. Your cold prospecting campaign will throw more people into that retargeting funnel, that retargeting pool, and that's why we want to be reaching all of them, right? So we want to be spending more as we move on and as we collect more people in that retargeting pool.
Nikki,
These
what
are
if
good breakdowns. Those are good notes there. If every issuer followed this, we'd be seeing a higher success rate industry wide.
Yeah, I was going to ask, what if, it's an ad that is consistently working for you and it's converting? And, what do we do, when it comes down to that?
Yeah, that's an excellent question. I'm glad you asked that because if let's say you have a retargeting ad that's working very well, and you don't want it to continue showing to the same people over and over again, you can actually make a separate campaign and exclude the people who have invested to the campaign already and only show it to those who haven't. And on top of that, there are frequency controls on Facebook where you can control how many times an ad shows, on a daily basis or weekly basis. And I normally set like retargeting ads if I want to set a frequency control. Usually it hovers around 3 to 5, which is actually pretty good per week. So that's where I'll set it at maybe like 5 in a week. They'll see it like every other day or so. So it's not like bothering people and annoying people all the time.
So you got to A/B test. You can't just have assumptions and work off those. It's not a matter of what you like, it's a matter of what the audience is responding to in a positive way. So you want to have variance with the channels, and then inside the channels, the audiences, the creatives, and the funnels you're taking them down. So headlines, problem focused versus solution based, see where you're getting the best results, creative format, video testimonials versus founder interviews. You may see one significantly outperform the other. Call to action, even things as simple as a learn more button versus, click here or see the opportunity in a piece of content. You want to see what's physically leading to the highest amount of clicks and conversions to follow. Targeting, behavioral versus demographic audiences. This varies for us. We'll have over 30 campaigns live at a time, and one will perform stronger than the other. It's just how it goes. There's not a one set, fits all type of rule when it comes to the advertising. And when to scale, 48 to 72 hours of data. That is going to reflect how much data. So if you're spending a lot more on the advertising traffic, you're producing a lot more visits, you may be able to do this on the quicker side of things. It may take longer if you're only getting, 20 people, 100 people to a funnel from a paid or organic placement. So you want to look at the statistical significance, and just getting into the conversion stage here a bit. Push qualified leads over the commitment line. Final 2 to 4 weeks of campaign. A lot of people, are holding their breath getting to that point. Happy to say it is real. Many campaigns had to stop on April 30th. We had various groups that were seeing moderate performance, see outstanding levels in comparison to industry averages during that final 2 week stage, and get into 7 figure, even multiple 7 figure levels when they were far from it before. Creating urgency without pressure. That's what you're trying to do in the conversion stage. And basically, there's an ethical urgency. What drives action? Campaign deadlines, milestone countdowns. This creates that fear of missing out. Community cues, join 500 plus investors. That says something. 500 who've already committed. If they've committed, there's got to be something behind it. Maybe I should. Social dynamics, early investor benefits, limited time perks or pricing, price increases. We'll see on the Regulation A plus campaigns produce a rush of investments. Momentum updates to end this. Raised X amount of dollars in the past 48 hours. That again gets attention and shows up in the form of conversions.
Yeah, and then your CTAs also matter. You can't just test invest now or learn more. That is pretty vague and generic. Switch it up a little bit. Test out. It goes back to the A/B testing. You know, play around with it, see what works. You'd be surprised to see something that you didn't think was going to perform well actually performed more than you thought. So secure your shares or see the investment details. It's kind of saying the same thing as learn more or invest now, but just a different spin on it. These campaigns are all about testing, and you want to test to see what works for you. Nikki.
Yeah, so on the later stages of the funnel, you want to be doing high intent targeting. You want to have been optimizing your ads, looking at what segments of your audiences perform the best. Like I said earlier, male or female, what age ranges, what regions perform the best. 80% of your budget should go to those. Especially later on in the campaign, you want to be capitalizing on retargeting and really the top performing segments of your audiences. Lead form captures. You want to, I think for some campaigns that we worked on, they actually had a whole call center set up. These are people who are calling these people who are submitted lead on Facebook and actually talking to them about the investment opportunity. And they've definitely seen some good results from there. Webinar invitations for direct engagement. I think this is a really good mid funnel, mid to late funnel thing to be doing for content. We do run ads to promote the webinars. We run some poll prospecting. We throw some co-prospecting campaign into it, but also a majority of our webinar budget does go to the retargeting audience because those are people who know about the campaign. They're more likely to sign up and participate in that webinar. And then last but not least, daily optimization of bids and placements. So you want to be looking at your ads like every day, making sure that they're optimized, turn off underperforming ads, and then be testing new things. And one thing that I rarely ever see mentioned, it's not mentioned on this slide deck, is also later on the campaign, especially if you're closing your campaign, you can run a investor re-engagement campaign. And what I mean by that is let's say your campaign, let's say you have an investor invest at 100,000 and you're closing your campaign, you're close to, I don't know, 700,000, for example. You're you've gone quite a long way from 100 to all the way to almost 700 now. So you want to be re-engaging the people who invested into your campaign early on. These are your most fervent investors, right? They invested into you early on. They must have seen something that investors later on didn't see, right? They liked you guys. So you want to be retargeting these investors and getting them to reinvest into the campaign. Perhaps they only invested 500 initially, but now later on they're seeing such good momentum. They've seen updates, they've seen progress you made, they've seen that social proof. They might throw an extra 500, maybe another 1,000 into the campaign. And we've seen that work very well for campaigns, especially those that are closing to really re-engage those previous investors.
Here's an example of Atom Beam. This campaign raised 19.9 million and completed in January. Regulation A Plus ran 3 successful Reg CFs before them as well. And they're a great example because they marketed in between rounds. They kept the audience engaged with content. They invested heavily into advertising during the Test the Waters campaign. That showed up with over 4 million in the first week of the Regulation A Plus campaign. Still took, over 6 months to be able to hit the full goal. But they're a data compression tech company, 8-week campaign. So this is referring to more of one of the Reg CFs that was shorter, complex technical product. Content drove 67% of their website traffic. So, have a founder story here, personal journey and expertise. Have the CEO Charles here talking directly to the audience, selfie video, use cases, real world applications, and you can see how it's designed into the ad and content, partnership announcements, validation from major tech companies, investor Q&A, addressing common technical questions, being able to really make yourself available, staying on. We had an issuer stay on for over 2.5 hours to answer questions for a webinar in April. And these webinars, by the way, worked on one with MagFast on Net Capital, raised over 500K during the webinar. Another one with Avadain that raised over 300K during the webinar. Rad Intel, so over $1 million within a 24-hour window of their webinar in May. These are all, within the past couple months. Can go on and on and on from there around what this looks like. So, looking at, Atom Beam media performance, 2.3% click-through rate, 42% cost per click. We're talking about some of the goals there, 8.7% from ads to investments. You're shooting for a 2% conversion rate. 8.7% is literally off the chart. And $12 raised for every dollar spent is pretty cool, to put it lightly. The pivot shifted budget from tech features to business outcomes.
Yeah, and we'll go through these as quick as we can. And there's big 3 campaign killers. Mistake 1, pausing marketing after reaching your raise goal. 2, consistent messaging between content and ads. And 3, neglecting mid-funnel retargeting. Just overall, you want to be consistent, and you need to be mindful of your audience. They are investing into you, and if you stop marketing after your campaign, you're gonna lose them. And then out of nowhere, you just come back and launch another campaign. You're asking them for more money. They're gonna be like, "What? We haven't heard from you from for almost a year, and now you're coming back and asking for more money. What you do in this whole year?" So you want to stay consistent even after the campaign. Yep, and this is how you. Well, go for
Yeah,
it.
I was going to talk a little bit about the ads. So correction strategies, some quick fixes when campaigns underperform. Week 1 and 2, you're really just testing. You want to be adjusting targeting and creative formats. I encourage you to test different uh, formats. I know we like to say videos, but test static graphics as well. Those we've seen perform well too. Week 3 to 4, reallocate budgets to top performing audiences. Top performing ads should get more budget. Audiences as well, same thing. And then week 5 to 6 and beyond, really focus on conversion optimization, urgency, and I want to emphasize that even in this later on stages into campaign, until you're 2 weeks away from closing, I'd still recommend testing different videos, audiences as well along the way.
Uh, Jason, I think we lost your audio. But yeah, I mean, these are three things that you could implement this week. Audit your messaging, take a look. Is this messaging talking too much about the product, or are we talking about the investment? You want to make sure there's a little bit of both, but more importantly, if your goal is to raise capital, you got to talk about the investment. You need to make sure the tracking is set up correctly. You'd be surprised how often this is missed, and now you're just launching ads without any data, and the data is already limited with how much we're able to see on our end. And create a content calendar. You want to plan ahead. Don't just wing it. You want to have a solid strategy when it comes to creating the content, and you want to map out what content is going to be great for each stage of the funnel.
Yes. So we know we're at the top of the hour, just kind of wrapping up here, continuing the conversation. Reach out to us for a free campaign audit. What's included? You could, be on the line with Khalil, with Nikki, with the team, and basically speak about funnel analysis and optimization opportunities. Every founder should be welcoming this, especially for groups that have worked with a volume of issuers, content, and not just us at that, content and media alignment assessment, performance benchmark comparison. Talk to us over a 30-minute strategy session. Jazz Parker, myself, do a lot of these calls. So, would encourage you to reach out with any questions and look to, set up a call to speak further. Follow Khalil on LinkedIn. Follow Nikki on LinkedIn, maybe TikTok as well too. But any parting words, guys? Anything you want to make sure we emphasize as we close out this webinar?
Yeah, I mean, the reason why we had this webinar in particular, Nikki and I, we were talking, and we are very surprised of how often this aspect is missed. It really does. It's a tag team effort. You can't just have one aspect of the funnel and not think about the other. You need to have content with your ads. And if you don't, you are going to lose the investor's trust, and you're not going to be able to showcase that momentum in a way that that you need to. So that's why this webinar really was important to both Nikki and I, because it's a shame how often this is missed, and we want to really echo that message that this is needed for any campaign.
Yeah, and I agree with Khalil on that. A lot of the advertising, world, there are a lot of issuers that don't understand that you need both media buying, the paid social aspect of it, and content marketing as well. They go hand in hand and they work very well together. And so if you're not doing both, you're not going to get quality touch points. You're only going to be shown ads, and ads can only go so far without the content, right? And vice versa. So you got to be doing both, or else you're unlikely to raise as much as your competitors who are doing both, right? So be doing webinars, be doing emails, organic posts, updates, all that good stuff, and of course, be doing ads and test, optimize, and scale.
That's right. Well said. You're looking to do $1 million, millions of dollars in sales, stock, security sales in a very quick window of time. Make sure you're putting your best foot out the door. Make sure you're throwing everything at your campaign, getting enough traffic, having a high enough conversion rate. It's a balance of all this. It's a team effort. And use all the resources at your disposal. We welcome that call at any time. There are other groups in the space that do the same. Take advantage of that, and don't be part of the lower half of the industry. Be part of the top 10% of issuers that get all the investments. Thank you again. A lot of fun on today's webinar. We'll see you next time, and reach out in between. Take care.